What's up, you guys? It's your girl, Roderica B, back at it again with another YouTube video. And in today's video, I'm going to be teaching you guys all about common stock. Now, what is common stock? Common stock is a security that represents ownership in a corporation. For example, if a company has 100 shares of common stock outstanding, each individual share represents 1% of ownership in that company. So, if you own 30 shares, that means you own 30% of the company. And with these shares, you're entitled to a portion of that company's earnings. Okay, now let's talk about the benefits of owning common stock. The first benefit is having certain rights. And the first right that you have is being able to vote for a board of directors. Companies have these things called shareholder meetings where you can come in and cast your vote for the directors and other things. However, if you can't attend the meeting in person, then you can vote by proxy, which basically is an absentee vote. The second right is that your shares are freely transferrable. And what that means is that you have the right to buy shares, sell shares, or give your shares away as a gift without getting permission from the company. The third right, you have the right to receive a copy of that company's annual report. The fourth right is you have the preemptive right to maintain a proportionate share of ownership in the company. So basically, if a company decides to issue more shares, then you as an existing shareholder have the right to buy those shares to maintain your current ownership. But hold on, I'm gonna give you guys an example. Alright, y'all, I'm finna try to draw this out. If it don't look good, y'all, please don't judge me. I'm trying. Okay, so here's company A. This building is company A. Company A has 100 shares outstanding. This is you. Okay? Sorry if any men are watching the channel, you're gonna be a female today. Okay, so this is you, and you own 20 of those shares, which means you own 20% of the company. Correct? Correct. So, company A goes and issues an additional 100 shares, which means they have 200 shares outstanding, which brings your ownership. I'm trying. Okay, that brings your ownership down to 10% because 200 divided by 20 is only 10%. Okay, so you, as an existing shareholder, have the right to buy. Wait a minute, this is you. Okay, you have the right to buy an additional 20 shares, which will bring your total up to 40 shares, and you'll still maintain 20% ownership in the company. Okay, those are your preemptive rights. You have the right to maintain a proportionate share. You get to buy those additional 20 shares before anybody else who's not an existing shareholder gets to buy more shares. The second benefit of owning common stock is growth potential. So when you buy common stock, it has the potential to go up in value because the market price of the stock goes up, which is also known as capital gains or capital appreciation. And because returns are usually higher than the rate of inflation, long-term investors buy common stock as a hedge against inflation. Now, the third benefit to buying common stock is income. For one, you can receive cash dividends. A lot of companies pay out cash dividends every quarter, and these cash dividends are declared by the board of directors, and they can increase over time. You may also receive stock dividends, which is just additional shares in the company. You can also receive property dividends, which are shares in a subsidiary company or product samples. My light just fell. Hold on. Okay, let me give you a quick little recap real quick. Okay, so the reasons that you may want to buy common stock include, one, that you have certain rights such as voting rights and preemptive rights, and you have the opportunity for growth potential and income potential. Okay. Hey, so I know you're enjoying this video, right? Right, great. So how about going down below and smashing that like button for me so YouTube can continue to push this video out to more people. And while you're down there, how about you leave a comment down below telling me what your favorite benefit is so far. Okay, do that, and then back to the video. Now, let's go over the risks that's associated with owning common stock. The first risk is market risk. Now, yes, the stock market can go up in price and your shares can go up in value, but the price of the market of your stock can also go down, which in turn would decrease the value of the shares that you own. The second risk associated with owning common stock is decreased or ceased dividends. If a company loses money that year, then they may choose to lower the dividend payments or cut out the dividend payments altogether. And then the third risk is having a low priority at dissolution. If a company goes bankrupt, common stockholders are the last people to get paid. Now, let me tell you a little bit about the liquidation process. Liquidation is the process of bringing a company to an end and distributing its assets to all of its claimants. So the order of liquidation goes like this. The first people to get paid are going to be the IRS and employees. They got to pay their taxes and all unpaid wages. They getting their money off top. Second is secured debt. Those are going to be your mortgage companies and your bond holders. Next is going to be your unsecured liabilities and your general creditors. The next people to get paid are the subordinate debt holders, which is basically people who agreed to be paid last of all other debt holders. And the next group to get paid are preferred stockholders. And then all the way at the bottom of the totem pole is those little old common stockholders. That was a lot of information. So let me give you a full recap real quick, okay? So, common stock represents ownership in a company. The benefits of owning common stock include having certain rights, growth potential, and income potential. The risks associated with common stock are market risk, decreased or ceased dividends, and low priority at dissolution. And if a company goes bankrupt, common stockholders are the last people to be paid. And that's everything you need to know as a beginner about common stock. And so thank you so much for watching this video. If you liked it, got some value out of it, give it a thumbs up for me, and go down there and subscribe and hit the bell to notify every single time I upload a new video. And yeah, that's it, y'all. Bye.